The tariff tantrum for stocks taking few prisoners. All 11 S&P groups are down this month. Even real estate and utilities. Those had been considered havens. Seema Mody is breaking it all down for the New York Stock Exchange. Seema.
Yeah, Brian, that was what was so interesting about today's price action. The sell-off on Wall Street was widespread, leaving no sectors behind. And yes, even the interest rate sensitive sectors that tend to outperform when yields fall, utilities, real estate, even consumer staples, all caught up in the market downturn. But with trade fears rising, investors have been buying up dividend-paying sectors. Check out utilities, now up about 5% in the past 6 months, outperforming the broader market. But some traders say that the sector's valuation is becoming a bit rich, now trading at 19 times forward-looking earnings, much higher than its historical average of 14 times. It's also trading at a premium to the S&P 500, which is trading at 16 times. Also worth highlighting that the Russell 2000, yes, the small cap index seen as more insulated from the U.S.-China trade war as it generates a large percentage of its revenue right here in the U.S., but that hasn't stopped investors from hitting the sell button. The Russell 2000 underperforming the S&P 500 this month. It's already down about 6%. And a lot of analysts say that's because while these companies tend to be more domestically driven, they still source a lot of their components and parts from overseas. Brian, back to you.
All right, Seema Mody at the NYSE. Seema, thank you very much. Well, perhaps in this market, the old sports adage is true. The best offense is a good defense. And your next guest has 3 stocks that he says that you should think about buying now. Mark Newton is taking off the charts for us on those names. Mr. Hokie, Mark Newton, take it away.
Thanks, Brian. So S&P today showed the first real sign of acceleration that we've seen in the last couple weeks. We see this trend that has undercut the lows from May. That was actually broken today, not only in S&P, but in NASDAQ, Dow, and in international indices, also like Stocks 50. So it does look like the technical structure remains negative, and we are going to see a little bit further weakness in the days ahead. 4 things that suggest this is still possible. One is that we haven't really seen any real fear yet. We haven't seen the capitulation of volume into down versus up stocks. That's important. Second, we haven't seen VIX backwardation. Normally, that's a factor. Indices are not really all that oversold either using traditional metrics. And fourth, we need to see more signs of stabilization in these sectors like technology that have really gotten taken out to the woodshed in recent weeks. And so as of now, none of those things are really in place. I'm looking at 27.22. That would be the first real level up to 27.30 to buy. With that in mind, it's been a very defensive rally in the last couple of weeks. Markets have sold off. What has outperformed? The defensive stocks. Let's take a look at Verizon. This is one of my top picks. Why is that? You look at the technical structure going back since the late 90s. This is at the highest level now that it's been at in over 20 years. This is a very important level going back since 1999. If anything, you look at what's happening in recent weeks, we've gotten up above. We've seen a minor breakout into the latter part of this year, consolidation, a little mini triangle. This is extraordinarily bullish, in my view, for the longer-term tape. Still pays a 4% yield. My thinking is it's right to be in stocks like this. Verizon is much better than AT&T technically. I would buy that. Another one I'm looking at, Avalon Bay, apartment REITs. They've outperformed almost every other part of the REIT sector. This one also, similar to the rest, had a big breakout early, the latter part of last year. We've consolidated. Now it's just moving back up to new high territory. This is also very positive. This pays about a 3% yield. In general, decent technical structure. You notice giant bases leading to higher highs, higher lows. That's also very positive. What's the third one? I like Monster Beverages. I think this is an excellent technical pick. Many people will complain it hasn't done anything in the last few weeks, and they're right. You look over the last 6 months, the stock has done nothing. Important, though, to have a longer-term perspective. You look back over the last 5 years, decent long-term uptrend, nice tight consolidation within this uptrend. That normally is very bullish. I want to be a buyer here on any pullback we see in the next few days to the next couple weeks, thinking the stock does start to break out. The next big move should be to the upside.
You know, Mark, great stuff. I would expect nothing else, by the way, of a Virginia Tech graduate. Monster Energy, the best performing stock, I believe, in the S&P 500 in the last decade, up like 40,000% or something. Right. So people may shy away from that. You say the charts show perhaps long-term more upside.
Yeah, I mean, my thinking is this really hasn't seen anything else but just a minor consolidation. You want to look for stocks like this. The market's selling off, but yet stocks like this have not really given a lot back. So it's forming a decent base, and you really want to be a buyer for what I think is upside. In general, if you go back to the previous comment, are the highs in? I don't think the highs are in for the year. I'm looking for lows in the market over the next 2 weeks, by mid-June at the latest. But 27.22, I do think S&P gets up to 30.40 to 30.70. The average stock, however, might not get back to those new highs into
Mark,
the fall.
A bunch of your picks, though, look to me, as you stated, double toppy. For me, when I buy a stock that looks double or triple toppy, I wind up waiting until it breaks through that level and using that as my support. Would you suggest the same thing, or do you think that you buy it as it's running into that level of resistance again?
Well, those are your words, not mine. I wouldn't say it as a double, triple top. If anything, these stocks are consolidating while the majority of stocks are falling. Indices have pulled back 5%. These are holding on and consolidating right near their highs. If anything, during times of market duress, it pays to buy these big dividend earners as they're consolidating for what I think is the next big move should be to the upside, particularly in stocks like Monster.
Hey, Mark Newton, great to see you. Thank you very much. Appreciate that. Those names again: Verizon, Avalon Bay, the big apartment community company, and Monster Energy. Guy Adami.
Yes, sir.
Any of those names
Monster,
stick out to you?
I will tell you, I understand what Steve's saying.
Been a monster.
Huh?
It's
Yeah, it has.
been a
You
monster.
said up 40,000% or something like that, and you said, great job by a fellow Virginia tech guy. Listen to everything you say. It appears I don't pay attention, but I do. And I'll say this. I understand what Steve is saying, but there's a chance that this stock trades up to 70 on the back of the earnings they just reported a couple weeks ago. 70 was the all-time high back in 2018. That's where we trade up to. I tell you, $8 on a $61 stock, percentage-wise, is significant. I think he's right about that.
Staying with Monster quickly, I think there's enormous competition in the space now. Their top-line growth has been excellent. It's been low double digits. I think the Coke arbitration is a thing that still hangs over this stock. Until that's settled, I don't think you need to do anything.
All right, guys, good conversation there, and thanks for the names, Mark.